Greetings students, scholars, and curious viewers. This is Mr. SKT, otherwise known as the Super Kuroishi teacher. This is the first mathematics literacy lesson for this channel. And as our first lesson, we're going to be dealing with a topic in which both grade 10s and 11s do during the year, and that is banking. Now, maths literacy is a subject where, despite having mathematics in its name, there are a lot of notes. And I have basically done quite a bit for y'all. So, if you feel that you need to pause during the video so you can take down notes, by all means do so. Please stick around until the end of the video. Without further ado, let's start with this section on banking, with the first lesson being banking accounts, and also an intro to banking. So firstly, what is banking? We go to the banks with our parents, and at this age we also go to the bank to deal with our own accounts. But what exactly is banking? So banking refers to the system that we use to store and manage our finances or our money. And I'm not going to tell you how long banking has been around for and what currency does what to which one. We're just gonna answer the question. Banking is how we store and manage our money. There we go. Next, why is it important? Why is it important to bank? Because it seems like a good idea. Because it seems like a good idea to be able to store and use your finances as you see fit, since keeping your money is supposed to add a layer of protection as opposed to keeping your cash on you. Banking also can assist towards future goals, whether planning the payment for something big and expensive or investing such you end up with additional income. So the whole idea of why everyone banks and why it's like why it's not even a negotiation for people to bank is because it's generally a safer place to keep your money. People are very skittish about their money, and they do prefer keeping it on them, and that's how you end up with people keeping jars of just loose cash. That's their way of storing money. But since banks are service providers, they are legit. They should be legit, and they add a bit of protection by actually keeping that loose cash all in one place, at least. And also by being subscribed to a bank, the bank actually does offer you assistance regarding your finances in the future, whether it be organizing your finances for you, like being your financial managers, in other words, or helping you towards your future, whether it be payment towards something big like a car or a house, or investing money such you have enough for an additional income. All right. What is a bank account? So a bank account is essentially your personal space in a bank of your choosing, where you store and manage your finances, and different types of bank accounts serve different functions. So a bank account is it's your space in the bank. It's where you keep your money. It's how the bank identifies you and how they know that, hey, this is your money in our bank. So that's because to you, you're not just, you are mainly a number to a bank, because banks service millions of people in this country, and other countries probably even more. So they use instead of keeping, they say that this money belongs to your specific name, because you remember you have different people with the same surnames or same first names. they assign you an account number, and from that point on you are a number to them. But it makes things easy to identify, essentially. Anyway, are there different types of banking accounts? Oh, you bet. Oh, you bet. There are about 4 different types of accounts. You get the saving or debit account, you get a check or a current account, you get the fixed deposit account, and you get the credit account. These are the four main types. I don't recall if there's any other major ones in South Africa that other people use. If you know of anyone, please put a comment in down below. It will make interesting, not only interesting reading, but something else to learn. What is the purpose of each of these accounts? What is the purpose of the saving account? What's the purpose of the check? The purpose of the fixed deposit, and the purpose of the credit. So starting with the savings or debit account, it's a card-based account, and it's mainly used for the customer, being you. It's for your transaction and banking needs. This enables you, the customer, to perform a variety of banking activities at any ATM countrywide. So it's essentially holds on to your money. It's the card. It's where you keep your money, and the card lets you use that as a replacement for cash. And it lets you also not only deal with like taking out money, putting money in, using that money as a replacement for cash, but also you can do a variety of different banking activities, like for example, like seeing the balance of your account, how much money you have in that account, or something like printing out a statement to show how much money is in your account and or all the transactions you've done in a certain time period. And these can be performed in pretty much any ATM countrywide, although that's a bit misleading. Usually it should be any ATM of that bank. So if you, let's say, bank in Standard Bank, for instance, you can use that card in any Standard Bank ATM. Although it's not completely true. Because there are also other factors that allows other cards to be used in different ATMs. Like for example, I know that an ABSA card has the word Visa on it. Now Visa is a bigger banking entity in which I believe has shares in other banks. And what this means is that you can use, like, let's say, an ABSA card in pretty much any ATM that has the word Visa there. So you can use like an ABSA card in a NetBank ATM, but you wouldn't really want to do that because you get additional banking charges. Anyway, continuing. The next one is the check or current account. So the check or current account is what we call a transactional banking account. It works pretty much the same as your savings account, but with one additional feature. The feature of overdraft. What overdraft is it essentially allows you to use more money than what the account has. So if you can go more, this allows you to actually go into a negative amount. However, if you do that, you better pay that money back. And you will be required to pay that money back. Why I say better pay it back? Well, because banks charge interest on overdraft. And the interest is quite quite high. And you don't want to be caught paying quite a bit for money that you could have paid back quite easily. Next, fixed deposit account. This account allows you to invest an amount of money in a bank for a period of time. You collect interest for that investment, but you cannot move or withdraw the investment until the investment period is over. So what this essentially means is, like, you basically tell your bank, hey, I've been subscribed to this bank for a while. You know what, guys? I'm going to invest a large amount, some money into y'all, so that will essentially assist y'all with your business. Because what's not spoken is that the more money a bank has, the better business it is for them. Banks want you as a client because they want your money. Because the more money they have stored, the more profit they make. And when we go to bank charges, you will soon see why. But anyway, so the way a fixed deposit account works is that you invest your money in the bank. They will keep that money for you for a certain time period. And during that time, what happens is interest is collected on that money. And that interest is added to that investment, where you can potentially use that interest if you want. But however, that original investment, you cannot move it. You can't move it. You can't withdraw it. You can withdraw or move the interest, but not the original investment until the period is over. So if you invested that thing for 5 years, you can't move it for 5 years. Well, there's a little untruth in that, because technically you can move it, but if you do, there are big fees that come with it. So you'd rather not move it. And then finally, the credit account. The credit account is essentially your credit card. A credit card or credit account essentially works where the bank allocates you a sum of their own money. So for example, so they could allocate you 30 grand, for example. So that 30 grand can be used however you want. You can use it for whatever bills you need, whatever any services or luxuries you want. But remember, it's not your money. It's the bank's money. And whatever you use, you are expected to pay back. If you don't, they will charge you interest on that. And then you end up owing more than what you initially spent. So those are the 4 different types of bank accounts. Now let's go on to the advantages and disadvantages of each. And don't worry, I'm not going to spend too much longer. Okay, starting with the savings and debit account. How much more do I have? Oh, not much longer. All right. So the advantages of a savings or debit account is that, number one, it's very flexible in usage. You can use it for pretty much anything, whether you're shopping, or you're shopping, your groceries, your bills, whatever you need it for, it's there for your usage. You also have unlimited access to it, so you can use it as many times as you want. So you have that as an advantage. And also another advantage about saving or a saving account or a debit account is that you do actually get interest based on what you have in it. Abid, that's where one of the disadvantages comes in. The interest rate is actually quite low in terms of a savings or debit account. I know that I think it's Nedbank, where I think it might be Nedbank, where if you have less than 4,500, you don't get interest on that. It has to be a substantial amount for you to get any interest. And that's not just Nedbank, that's pretty much any bank. And also, the unlimited access can be a disadvantage as well. It's only a disadvantage dependent on the type of person you are. If you are that kind of person that, for example, let's say like you gamble, you might go into that too much for your own good, and as a result burn through your savings faster than you want. So that's one example of how unlimited access is a disadvantage. It's a poor example, mind you, but it's the only one I can think of. And it was also stated that if a thief gets a hold of your card, they can actually use it to access your savings as a disadvantage. But that's not a disadvantage just for saving accounts. That's a disadvantage for any of them. So hence why I did not put it there. But generally, when you do get these different accounts, do be careful. People are going to want to try and get your PIN, which is your personal identification number, and they want your money. But if they don't get it, but that's where another advantage to all of these cards comes in. It's not only locked behind a bank, but also behind your personal identification card, your number, and you can essentially lock it at any point you want. And that's not just savings, that's any of them. Anyway, so that's savings. Let's go on to now the check or current account. So the first advantage is, just like the savings or debit, it has a flexibility of usage. You can use it pretty much any way you want. The next one is allows usage of funds through the use of a check. So the reason why, this is where the story behind why it's called a check account. You see, this was the account that was commonly used when checks were more widely used. A check, by the way, was an alternate way of paying for things. It looked like a rectangular piece of paper that people used to write like their check account details, the amount of money in letters, in words as well as numbers. And it came in something known as a checkbook. But nowadays, checks are regarded as very outdated. In fact, at the recording of this video, ABSA had told me that they're actually stopping check payments during this year. So that's how outdated and how unused checks are nowadays. Although in this country of South Africa, checks do still have a prominence in the more impoverished areas, because people still will receive a pay, like people don't always have bank accounts, and they are required to get their salary via a paycheck. And this is the other advantage of a check account, especially where your paycheck automatically goes into the check account. If you have only a savings account, there's like additional hoops and hops in which the money needs to get deposited into that account. With a check account, just automatic goes in. And also there's the advantage of potential overdraft that can save you in some cases. Now that goes into the disadvantages. Number one, there are more service fees associated with a check account than other accounts like the savings accounts. Number two, overdraft fees. That alone is a disadvantage, because remember, the interest rate for overdraft fee is actually quite high. You do not want to get caught in overdraft fees. Number three, a minimum balance is required. So in order to have a check account running, you can't start with 0 rands. You can't have a 0 rands in your you can't start with 0 rands. You need to actually start with a positive amount. Whether it be 100 rands or whatever, that it must start, and depending on the bank, they may even not allow you overdraft. They may even stop. They may even stop. Like if you are going to spend more than what your account has, they might even prevent you from going towards overdraft. But this usually depends on your credit score. Something that we will have to talk about just now. And finally, the interest rates are very low. Yes, check accounts do also collect interest depending on your amount. However, they are very low and probably not really worth talking about. Right. Then we go on to the fixed deposit accounts. So the first advantage of the fixed deposit account is that it offers a very higher interest rate. The whole purpose of fixed deposit is for you to gain interest, for you to gain essentially another income in some way. So the interest rates, of course, are going to be higher to entice you to invest in that bank. And also, it is a safer option for keeping a larger portion of money. Remember, fixed deposits, the invested amount cannot be moved. It can't be withdrawn without a very large fee. So if you want a way of keeping a very large sum of money, investing it is usually a better option. And if you don't want to keep it there for 5 years, keep it there for just 1 year. Or it sort of serves as a safe that makes you money. The more money, the better, though. Now, the disadvantage is, as I mentioned, it cannot be withdrawn until the term of the fixed deposit has been completed. If your term of fixed deposit is 1 year, you can't move it for that until that 1 year is up. Although that moves into the second one where there is the exception. You can technically move it, you can withdraw it, however, it comes with high fees. So it's up to you if you need it all depends on the urgency of how much you need that money. So that's why it comes with a big decision of whether you actually invest or not. If you can afford to invest it and such that you don't need that money, then by all means, maybe go for it. And then finally, the credit account. The credit account doesn't have much to talk about, but these are the ones that I managed to scrap up. If you can think of more, by all means, tell me. So the first advantage is, just like the savings and the check accounts, it's very flexible in terms of usage. Your credit card, your credit accounts, you can use it for pretty much anything. And the second usage, which I'm surprised not many people actually talk about, is that if you keep a good upkeep of your credit card, in other words, you pay off your overdrafts, you keep it in the credit, and such you don't owe the bank anything, then it actually increases what we call your credit score. Your credit score is just a score that is assigned to you in terms of how well you keep your accounts, especially your credit account. And it's worth knowing what your credit score is, especially if you want to start building towards something like getting finance for a house or a car. Because what happens is, for things like that, if you want good interest rates, then what the finance people will do is that they will check your credit score, and if your credit score is good enough, you might actually qualify for a better interest rate. All right. And then with that being said, let's now go. And with that being said, let us go to the only disadvantage that I can think of, which is service fees. Whether you use the credit card or not, you get charged for service fees for it, and you might have to just top up your card just based on the service fees alone. But that potentially goes towards your good upkeep if you can keep yourself debit free. And with that, students, that's our first method lesson based on banking, catering to both grade 10s and grade 11s. If you enjoy this content, please give this video a like, share and subscribe, and also comment on what you want to see. Comment on what you want to see in the future. With that being said, have a nice day.